Welcome to Agoracom Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007. Okay, let's unpack this. Our mission in this deep dive is really to cut straight through all the market noise. We've got a stack of announcements today, quite crucial ones, covering everything from tech resilience to Canadian gold and even some big base metals finds.
Exactly. We're looking for those, specific actionable results, the numbers, the strategic moves that really tell you something solid.
Stuff that makes you, the listener, think, okay, this one might be worth digging into deeper myself.
And maybe there's a theme emerging today. I'm seeing strategic de-risking across the board.
How so?
Well, whether it's resource exploration or, critical tech, the companies catching my eye are the ones building scale and certainty. Think validated products, consistent geology, smart funding.
Right. Things that build confidence for the long haul. Okay, let's get into it. Let's kick off with technology. This headline definitely grabbed my attention. Draganfly wins second major order from Fortune 50 Telecom for tethered heavy lift drone fleet. That's NASDAQ and CSE symbol DPRO.
Yeah, that's significant. A second major order from the same huge telecom. That's not just kicking the tires anymore.
It screams validation, right? They clearly liked what they saw the first time. It feels like a move towards standardization.
Absolutely. This isn't some pilot program. It suggests this Fortune 50 company is really integrating these drone solutions, specifically U.S. authorized ones, into their critical infrastructure plans. Think disaster recovery.
Okay, let's get specific on the tech. They mention integrating the Commander 3XL drone with the Landia tether system. We always hear about drone battery life being a bottleneck. Why is this tether such a big deal?
It's all about persistence and security, really. The tether delivers two key things you need to grasp. First, continuous power.
So no landing to swap batteries every hour or so.
Exactly. This allows for persistent airborne operations. Keeping that eye in the sky or that communications node up for hours and hours, crucial during a prolonged emergency.
You mentioned security, too. Is a physical tether somehow more secure than, say, a wireless link, especially in maybe a chaotic post-disaster scene?
Definitely. It provides high bandwidth data transfer, almost like having a fiber optic cable running straight to the drone. It's incredibly stable, reliable data throughput.
Okay.
And crucially, it's much less vulnerable to electronic interference or, jamming. In certain environments, that physical connection is key for secure, guaranteed comms when ground systems are offline.
Got it. So it's not just about lifting heavy things, it's about reliable, secure, long-duration operations, and they emphasize it's an NDAA-compliant fleet. Remind us why that compliance is so important.
Oh, it's huge. NDAA compliance basically means it meets strict U.S. defense and security standards. It ensures the tech isn't sourced from certain restricted countries.
So it opens doors.
Big time. For critical infrastructure operators, using NDAA-compliant gear minimizes geopolitical risks and makes them eligible for things like federal contracts and disaster relief funding. It's a major checkmark.
And the CEO, Cameron Schell, his quote basically backs this up.
Yeah, he said this second order confirms the system's reliability for disaster recovery, logistics, communication support. It's that blend of staying airborne for a long time and being from a trusted supply chain. That's what's driving these big orders.
Okay, let's pivot from tech resilience to geological resilience. We're heading up to Canada's gold districts now. Two stories here about building resource confidence. First up, Banyan Gold extends high-grade mineralization at Yukon's RMAC project, symbol BYN on the TSX venture.
Right, Banyan. This is about showing continued growth in what looks like a potentially massive gold system. The key numbers are coming from the airstrip deposit.
Let's zero in on those. What did the drill find?
Drill hole AX25708, that's the one to note. It hit 3.66 grams per ton, gold over 17.6 meters. That's a decent grade. Good width. Pretty solid.
Okay, but let's add context. RMAC already has this huge 7.7 million ounce resource, mostly lower grade, right? A bulk tonnage type of thing. So how important is the other number they reported? That high-grade bit inside 1.6 meters running almost 36 grams per ton.
Good question. It's vital. You're right. The 7.7 million ounces give you the sheer scale, the potential mine life. But these high-grade pockets, they're like the economic engine, especially early on.
How so?
They can significantly sweeten the average grade going into the mill in the first few years. That drastically improves the project's economics. Think faster payback, better overall profitability. It makes the whole thing much more attractive.
And finding more of this high-grade stuff, showing it connects up. That builds confidence.
Exactly. They're showing this high-grade core linked to this specific rock type, this felsic dike, continues for over 500 meters along strike and goes down almost 300 meters. That's real continuity. It suggests the quality within the quantity is holding up.
And back to that de-risking theme, the location helps too, doesn't it?
Oh, absolutely. The Ormac project sits right next to the main highway in the Yukon, and it has access to grid power.
Which means?
In the north, that's a massive advantage.
Yeah.
Cuts down projected capital costs, makes logistics way easier than, a remote fly-in, fly-out operation. Big checkmark for practicality.
Okay, let's stick with Canadian gold but shift provinces. Over to Ontario. Gold X2 extends high-grade gold corridors at Moss Main Zone in Ontario. TSX venture symbol AUXX.
Right, Gold X2. This story is really about building certainty. They're doing what's called grade-controlled drilling.
Meaning drilling holes very close together.
Exactly. Tight spacing. The goal is to confirm the gold is where they think it is and that the grades are predictable. This is what you do when you're seriously planning to mine.
And the results.
Pretty compelling. They hit 78.4 meters, averaging 1.44 grams per ton gold, starting super shallow, just 15.6 meters down. That's practically right at surface.
Wow, yeah, that screams open pit potential. Low stripping.
Definitely. And within that broad zone, they got those richer intervals too, like 16.2 meters of 5.59 grams per ton and 18.2 meters of 3.41 grams per ton. That's the kind of stuff that makes an open pit really work.
Okay, so the near-surface results are great, but you said this tight drilling is about certainty. They specifically mentioned converting inferred resources to indicated. Why is that step so critical before, say, getting financing?
It's all about bankability, really. Inferred resources are, let's say, estimated with lower confidence. Based on wider space drilling, more assumptions. Indicated resources require this tighter drilling.
More proof.
Exactly. Much higher geological confidence. And you need that indicated classification to underpin serious economic studies, like a PEA or a feasibility study. Those are the documents lenders need to see before they'll write big checks. You can't really finance a mine based just on inferred.
So this drilling, while maybe expensive, is a necessary step to de-risk the project for potential funders.
Precisely. The CEO, Michael Hendrickson, basically said as much. He mentioned how defining these higher-grade zones could positively impact the economic performance. They're proving it out, block by block, making it investable.
All right, let's shift gears slightly. Still talking resources, but bringing technology back into the picture. ESGold Corp. That's CSE, symbol ESRU, put out a headline. AI-enhanced 3D model defines a potential district-scale gold and silver system at ESGold's Montauban Project.
Now, this one's interesting because it highlights how new tech can unlock value from old data. They didn't drill new holes for this announcement.
So what did they do?
They used artificial intelligence, AI, to build a new 3D geological model. But here's the clever part. They fed it over 50 years of historical data. Old drill results, mine plans, maps, everything. Stuff that was probably sitting in dusty boxes or disparate files.
And the AI found something new.
It basically put all the pieces together in a way nobody had before. It revealed what looks like continuous stacked zones of mineralization extending well beyond the old mine workings. It's transformed the view of the project.
From what to what?
From maybe just a local cleanup job reprocessing old mine tailings to potentially a whole district-scale system for gold, silver, and maybe base metals too. It's a much bigger picture now.
Okay, seeing a bigger target is one thing. Funding the exploration for it is another. Small companies often struggle with dilution. What's ESGold's plan here?
And this is where it gets strategically smart. They have a dual-track approach. Track 1, get the tailings reprocessing plant running, aiming for cash flow by 2026.
Okay, near-term revenue.
Right. Track 2, use that potential cash flow to help fund the exploration on this bigger property-wide target identified by the AI.
So the tailings pay for the exploration, trying to minimize dilution.
That seems to be exactly the plan. Instead of just going back to the market for more money, potentially diluting shareholders, they aim to use the revenue from the near-term production to fund the blue sky exploration. It's a sort of self-funding model.
Interesting. And the CEO, quote, supports this.
Yep, Gordon Raw basically said, we're building production now.
Yeah.
And that production will help fund the discoveries to come. It's about using one asset to unlock the potential of the other, ideally with less pain for existing shareholders.
All right, compelling strategy. Let's move to our final story. Base metals this time, down in South America. DLP Resources extends copper molybdenum mineralization in Peru as new survey advances second project. Symbol is DLP on the TSX venture.
Yeah, DLP is putting out some seriously impressive drill results from their Aurora project in Peru. We're talking about defining a big porphyry system here.
Give us the headline numbers.
Okay, check this out. 809.60 meters, that's a huge length grading, 0.47% copper equivalent. And within that, a chunk of 439.60 meters running 0.58% copper equivalent.
Wow, over 800 meters. That's a massive intercept, almost a kilometer of continuous mineralization.
Exactly. It speaks to the potential size and scale of this thing. But there's another detail in there that's really crucial for investors to notice.
Which is?
The hole bottomed in mineralization.
Meaning they stopped drilling while they were still in the good stuff.
Precisely. They hit the depth limit of the drill rig, or their planned depth, but they hadn't drilled out of the copper moly zone yet.
So the system is still open? Potentially deeper?
Open at depth, possibly laterally too. It tells you there's likely more there. It significantly de-risks the idea of finding even more tonnage with future potentially deeper drilling. It suggests a potentially very large, long-life system.
And they seem to be moving quickly to quantify this.
Yeah, they're not sitting still. They reiterated they're on track for an updated mineral resource estimate and, importantly, a preliminary economic assessment, PEA. They're targeting Q1 2026 for that.
And a PEA is that first real economic snapshot, right?
Correct. It puts initial economics around the resource, gives the market a sense of potential value. It's a major milestone for attracting further interest and potentially partners or financing.
And it looks like they're not just a one-trick pony. Mention of a second project, Esperanza.
Right. While Aurora moves towards the PEA, they're also advancing Esperanza nearby. Starting a drone magnetic survey there now. That follows up on some earlier rock chip sampling that returned grades up to 4.71% copper.
So keeping the exploration pipeline full while advancing the main asset.
Exactly. It shows a strategic approach, building a portfolio, looking for multiple large-scale opportunities in a good jurisdiction. #outro.
Okay, so you've covered a lot of ground quickly there. 5 companies, 5 different stories, but all with some pretty specific, actionable results hitting the wire.
Yeah, we went from Draganfly DPRO getting that crucial repeat order, validating their tech,
to Banyan Gold BYN and Gold X2 AUXX, both showing progress defining and de-risking Canadian gold deposits with solid drill results.
And then ESGold, ESU, using AI to potentially unlock district scale, funded by near-term cash flow.
And finishing with DLP Resources, DLP, hitting that massive, nearly kilometer-long copper intercept in Peru and driving towards a PEA.
And that underlying theme, I think, holds up. Translating data, whether it's from a drill bit, an AI model, or a repeat customer order into tangible market confidence.
Converting inferred to indicated, using tailings cash flow. Practical steps.
Exactly. Steps that reduce risk and build scale methodically.
So maybe a final thought for our listeners to chew on.
Maybe think about this. How much weight do you give to those seemingly small technical details? Like a drill hole bottoming in mineralization, or the absolute necessity of an NDAA-compliant physical tether for a specific mission. How do those very specific incremental proofs of concept fundamentally change a company's long-term risk profile, perhaps even more than just a flashy headline number?
Interesting point. It's about the quality of the progress, not just the quantity. Okay, hopefully this deep dive gave you some concrete starting points, those grades, those strategies, those symbols, DPRO, BYN, AUXX, ESAU, and DLP for your own further research.
Definitely worth a closer look based on these updates.
That's our time for today. Thanks for joining us on the deep dive.